Welcome back to the Proof of Stake. I'm Adrian Henry, and this is going to be some Bitcoin analysis. I got my call yesterday almost entirely wrong. So I expected a very much range-bound, consolidating, boring kind of day yesterday. I thought we were just going to hop around in this area, not do very much, and just track the back of this trend line potentially. But if we play it out, we can take a look at what happened. So it started off pretty well. So we left off on this candle here. We just dropped a bit down onto the support again. We hopped up, we started bouncing a bit, and it was just very boring. But then that happened. We dropped pretty considerably. We broke this low and we started forming a short-term bear flag, which was indicative of even further downward movement. So at that point, I was expecting this level here at 8,900 to hold. So that's a level I've been calling out for over a month now. I've had long-term bids in there, and if we zoom out, we can take a look at why. So it's this area in here where we have these swing highs. It seemed like a pretty considerable area, and I've thought that this area would be pretty strong for quite a while. So when we started forming this bear flag, I thought we would maybe drop down to here, maybe a bit further just because of the momentum of the move, but not too much, and then start to consolidate and move back towards the upside. But if we play it out, what actually happened is we went careening down straight through there. So this candle was kind of promising, where we got a bit of a wick off the level. The next candle didn't do very much at all. So it was looking pretty promising at that point, that level was just holding really strong. But then we just went straight through there and made a new low down here. And if we zoom out, we can see that new low actually corresponds with the low of this range in here. So I guess it's not all bad, because we did find some support in an area where there should have been a bit of support. We just didn't find it in the area that should have been strongest. But as we know, that's technical analysis for you. We don't ever know what is going to happen. We can only say with probabilities what may or may not happen. And in this case, what I thought would happen just totally didn't happen. But you've got to react to that. You've got to concede that you were wrong and not place any emotional baggage on that, and just deal with what the chart's giving you now. So right now, we've came through, we found some support here. If we zoom in and continue the playback, we can see that we are now in real time here. And what we've kind of seen here is we've made this bottom around the support area. We bounced pretty significantly, we've come back, we nearly double bottomed, and then we put in a wick, and we're now on the next candle. And we have tried to move higher, but since been pushed down. If we do start to move lower from here, there are a lot of signs to suggest that we might potentially make new lows, which would be good because we're getting a discount, but it would be bad because we've had this sort of relief over the past couple of weeks that we might be out of it. And honestly, I was just thinking that Bitcoin would cool down, because it's been the star of the show recently for good and bad reasons. I was hoping to see some consolidation. So if we hop back out onto the daily chart, we can take a look at what's going on in the chart here. And if we start to move lower, there just isn't any structure here to stop us from continuing down to make new lows. And if that's the case, then that's the case, I guess. And then if we do break those lows, I mean, we can come down here to 4,900 and then down here to 3,000. They're the two next big support zones, really. But honestly, I'm not that bearish yet. I don't think we're in that area yet where I'm worried about breaking new lows. I do think we're going to find some support here and consolidate for a period, because we've just been very volatile recently. We've shot up nearly 100%, double topped here, and then just careened down. It's a lot of price action, a lot of movement, so we do need a period to cool off. So I do expect that we would find that period here, but as always, we never do know. But one thing that I've noticed is we're somewhat getting a bit of a fractal pattern. So if we look here, we had this huge run up, a drop, a run back up to double top that area, a pretty significant and sharp drop, and then an attempt at a recovery, and then a bigger drop. And if we can see here, we've got this big run up here, a drop, a run up to double top that same area, and then a very sharp drop. So we could be seeing a fractal here where we come up into this area. So I'll grab the paintbrush so I can draw this on. So from here, we find some support, we come back up into this area and maybe find some resistance around this area here, and then maybe come down here, potentially to here, and then we start to move up. So this would be the same area as here where we would find some support. So that's a potential pattern that we could see playing out, which would be a fractal of this bigger pattern. So that'll be something that I'll be on the lookout for sure, to see if that's playing out. I'll remove these off the chart. But something else I want to touch upon is the log channel that Luke Martin, the venture coinist on Twitter, has been speaking about for several months now. So if we hop over here to look at it. So this is from the start of 2017. We're on the log chart, and he's drawn a channel linking all of these highs together. And we can see we've got touches all the way up this entire run through 2017. And then do the same with the bottoms. So link all of those up. And I've also added in this median line myself onto this chart, just so we get an idea of roughly where the middle is. And the idea here in a channel like this is the price is going to want to gravitate towards the middle all of the time. And anytime we're at an extreme, we'll be looking for a reversion back towards the mean. That's the concept. That's the idea behind it. And as we can see, this channel was respected for almost all of 2017 until we hit this parabolic run where we went ballistic out of the channel, but we came straight back into the channel, collapsed, and we hit the bottom of the channel. So we did probe through it, but we came back up to close within the channel. So that was a good sign that the channel was still in play. And then we started to find some upward action. We made it into the middle of the channel, hopped around the median a bit, and now we're dropping. And we are approaching the bottom of the trend line again. So based on this analysis that Luke's done, it's another bit of confluence to suggest that we should find some pretty strong support in this current area. Maybe we drop a bit further, because we do, if we zoom in, we do have a little bit to go until we actually touch the trend line again. And as we saw back here, we did probe through it and come back up. So we do have a bit more room on the downside where we could move and still be holding this channel. But ultimately, the idea here is that we should be finding some support soon, and maybe another move back up towards the mean, and hopefully even a move back up towards the top of the channel. But who knows? So this is just piecing together different pieces of information to build up a picture of what we would need to happen to remain bullish. And that's all we're kind of doing here. Long term, I'm still very much bullish on Bitcoin, but medium term, I'm somewhat neutral. I don't think that we're going to see another parabolic run anytime soon. I think we're just in an accumulation phase. We're just going to be bouncing up and down in a range over the next several months. That range might be from sort of 7,000 up to maybe 12,000 or something. And maybe we just hop around in that area for another couple of weeks or couple of months. But short term, I would really like to see some support. Because if we do start to break this channel and we start to head down towards new lows, then we are just very much bearish. There is no argument against that, because when we were in this downtrend here, we were still above this channel trend line. And we could always make the argument that on the log chart, we are still above the base trend line. And we did probe down through, and a lot of people panicked in this area because they thought that we were invalidating this channel and we were going to make new lows. But we did put in this massive wick and we stayed within the channel. Good sign. And then we can come back into here. But if we start to break this channel from here and we start to head down towards new lows, we can't make an argument that we are still in a bull run. It's just not possible. At that point, we definitely will have invalidated the bull run and we will be into a bear stretch. How long that bear stretch will last is anyone's guess. But you can't fool yourself into thinking that we are still in a bull run. So I think that's enough talking about this channel. So I'll just jump back onto the normal chart and I'll drop down onto the hourly, and we can just start thinking about what my strategy is for the day. So right now, I am considering getting in long because of this double bottom and just running up into this area of congestion here. And hopefully what will happen if we do see a bounce up into this area is that we'll come back and settle onto this 89 level. If that happens, I think it's a good short-term sign. If we can't break back above this 89 level and just consolidate in here, we may see a bit more downward move. But really at this point, I'm not confident in making a very strong decision in either direction. We're just in limbo. So for now, I'm kind of just going to sit on my hands and just watch the market, which has really been the theme of this week. I've not done particularly much this week just because the market's not been conducive to it. We have had some aggressive moves, but there's not been any significant setups for me to get involved. So I've just basically watched the market all week. But yeah, I'm sorry I can't tell you that we're going to the moon or we're going to hit 20K tomorrow or something. But that's just the nature of technical analysis. A lot of the time, you're not going to have any strong convictions either way. And you've just got to let the market play out and just watch the charts. And the more patient you are, eventually an opportunity will come up where you have a bit more conviction, you think it's a higher probability setup, and that's the point you pull the trigger. All too often, people are trying to force their own will on the market because they want to get involved. They want to trade. They don't want to do anything because they're bored or who knows what else. They just want to get involved. So they'll start to dream things up. They'll start to see patterns that aren't there. They'll start to develop conviction in an idea that doesn't exist on the chart. They've just entirely fabricated it. So you need to avoid that mindset and avoid the folly of that. So you just need to sit on your hands for the most part and have other things to do depending on the time frame that you're trading. So typically I'm on the hourly. So I don't need to be staring at the charts all day, every day. There's just no need because I'm likely not going to take a decision at 1/2 the hour because we're midway through a candle. I don't know how that candle's going to close. And there's a huge difference between this candle here, this big down candle. There's a huge difference between it closing down here and being a nice deep bearish candle, or it comes all the way down here halfway through the hour and it looks really bearish, but then it closes back up near the top. That now looks like a bullish candle. So I'm not going to make a decision halfway through the hour. So I can fill my time with other things. And I think that's crucial. You need to remove yourself from the equation a lot of the time because that's where the mistakes are made. When you're still part of the equation and you start to get bored and you start to look for new things to do and you'll make up things, you'll fabricate things, and you'll just get involved in trades you just should not be even looking at. So remove yourself from the equation. And if you're trading on a daily time frame, then even better. You can look at the charts like in the evening and have the whole day to yourself. So that's perfect if you're working a 9 to 5. You don't need to be staring at the charts all day. You only need to look at them close to the close of the candle. Make a decision based on that, set your orders, and then the next day you do nothing until the following evening. So that's definitely something you can look into if you're doing that. And it's the same on the hourly. So I'm trading on the hourly, but throughout the day I'm doing various other things. I'm making these videos while the market's playing out, and I'm editing these videos, and I do other things. I've got other projects that I'm working on, and that's how I fill my time away from the charts. So I'm constantly monitoring what's going on, but I'm not intently staring at the charts all day, every day, because that's when you get bored, and when you get bored, you will slip into bad patterns where you're going to make bad decisions. So I think that's a good rant for a Friday afternoon, and I'm going to go off and have a beer and forget about Bitcoin for the weekend, and I will see you all again on Monday.